In today's discussion about SoFi, I want to walk you through some key data points that influenced its movement, along with everything else you need to be aware of. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. Now let's dive straight in. SoFi stock fell by 1.61% today, underperforming compared to the broader market. Trading volume was also lower than average, with 31.2 million shares being exchanged, whereas the typical volume is about 41.1 million. Interestingly, there wasn't any significant news from the company. Initially, I thought it might be related to Jeremy and his unfortunate divorce situation, but upon checking, it turned out to be an affiliate selling around 28,000 shares. Not exactly earth-shattering, but worth noting. While it wasn't Jeremy, it raised some eyebrows, though perhaps it's better for SoFi that it wasn't him selling. Setting that aside, SoFi lagged the overall market right from the opening bell. One of the key pieces of data released earlier in the day was the manufacturing index, which came in at 47, lower than the forecasted 48.6. This marks the third consecutive contraction in manufacturing data, signaling that the broader economy continues to slow down. Because of this, there's growing speculation about the upcoming Federal Reserve meeting on November 7th. The market is now pricing in a 54.8% chance of a 50 basis point rate cut, while the odds for a smaller 25 basis point cut are at 45.2%. Looking ahead to the December 18th meeting, the consensus is currently leaning toward a 25 basis point cut. These developments primarily impacted consumer-focused stocks, but as always with SoFi, market manipulation and short selling play a huge role in its daily performance. Speaking of short interest, SoFi saw shorts return 3,000 shares today, with 18.3% of the free float still being shorted. That's roughly 192.33 million shares overall. The average short borrow fee is 0.96%, which might lead some to wonder why SoFi struggled today despite shorts returning shares. The answer lies in heavy institutional selling, with over 1.07 million shares being sold off today. There were a couple of buys early on, including one sizable purchase of 2.39 million shares, but the overwhelming trend was selling pressure, particularly in the dark pools where a large portion of shares were offloaded. It's clear there was significant institutional selling today, making it hard for SoFi stock to gain any traction. However, not everything is grim. One promising sign came from the options market. Today, there were 4.52 million in call options versus 1.59 million in put options, indicating a roughly 48% bearish sentiment. Yet there was an intriguing cluster of bullish options activity around the $14 strike price with an expiration date of November 15th. There were multiple smaller bullish transactions that totaled around $66,000 in premiums. It's possible this could be retail investors, or it could be an institution positioning for a rally. Either way, someone out there is betting on SoFi reaching $14 in the near future, likely tied to the company's upcoming earnings announcement. Looking further into the call options, you'll notice some optimism at the 8.59 cents level, with growing interest around the $9 range. One noteworthy point is the substantial open interest in the $8 and $8.50 strike prices. In fact, there are 15,000 open contracts at the $8 level and 30,000 at $8.50. This suggests there's a lot of focus on these price points, which will likely act as strong resistance levels moving forward. Currently, with SoFi trading below $8, it's interesting to see how the technical indicators stack up. From a technical perspective, SoFi remains in relatively decent shape. The stock is still trading within its higher percentile and remains above several key moving averages. However, the stochastic indicator shows that SoFi is currently overbought, meaning we could see a pullback if the stock shows any signs of weakness. Despite this, SoFi still seems poised for a potential run-up, particularly as we approach the company's earnings announcement, which is expected within the next few weeks. Historically, SoFi tends to experience a FOMO, fear of missing out, rally leading into its earnings release, so that's something to keep in mind. As long as the stock continues to create higher highs and higher lows, and stays above the $7 range, the technicals remain favorable. Even if SoFi experiences a pullback to around 750s, it could reset the stochastic and set up the stock for another push higher. Retail investors seem to be stepping in where institutions are not, with many buying the dip today. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.